Hey everybody, good afternoon. It's about 12:20 in the afternoon on the 6th of January 2022. I'm here to do an update. Giovanni, hello, thanks for joining. I'm here to do an update on Bitcoin, the S&P 500 and Nasdaq. I'm also going to take a look really quickly at bonds because I think that's also an important factor to look at here. Before I get into any of this, of course, you all know this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. I feel like I should have that recorded right now so I don't repeat myself every time, but that's okay. What I want to focus on is what happened yesterday. After we had FOMC minutes released at 2 o'clock, a couple things that I talked about on the Discord, which of course is all hindsight, but I've been discussing this for actually 2 months, and it's actually been longer than that. But it was easy for me to find evidence that I've been discussing this for the last 2 months, including yesterday morning before FOMC actually happened. So first, let's go ahead and take a look at the chart here. So I've got the 10-year T-note on the chart. And basically, I'm looking for a bounce on T-note to come back up here to potentially 130 to 131. I think it's likely going to happen sometime in the next month. So ultimately, what this means, because ZN is sort of inverted from US 10Y. So let me get US 10Y on here and show this to you, because this is the 10-year government bonds yield. You'll notice that it looks a little bit different, and we had been kind of eyeing this to move up, but I believe we're probably going to get a pullback, right? So we have a trend line that we broke out of. I expect that we're going to get this pullback again down here to 1.63, 1.64 before it actually moves up higher. And I've got a projection on this that's actually gone out for quite some time. We've been talking about this, and I'm going to have to probably go to a daily to look at this. And I've got basically two different sets of theory here. One of them is that bond yields are probably going to go to maybe 2.5%, which is significantly higher from where they currently are right now. The other one is that we're actually going to come back down here to maybe 1% or so. It's going to be very interesting to see how this all happens, depending on how the accessibility of money works over the next year. But I would say over the next couple weeks or even month, I do think we're going to get a pullback potentially below this red trend line, which is going to take our bond futures and get a good bounce on these to come back up here to these levels. Again, somewhere between 130 and 131. I'd be looking for a move up here to about 130.28.5, which is right there. That's going to be where prior support was, and we had some clustering there. So if we get that pullback, V-shaped recovery, we've seen that in a lot of stocks today in particular. I would say it's probably going to be what happens. So I took a very low risk play. I didn't even get the actual futures contracts. I got some some cheap options on the ZN futures that go out to March. So that's what I'm looking at for this. Ultimately, this looks like a really big head and shoulders, which looks like it has already broken, right? So you see we've got our left shoulder, we've got our head, we've got our right shoulder here, and then we've got a neckline, which is right here, which basically has broken, right? We've broken. We actually had a really good play back here. We made a few $1,000s per contract getting into some ZN futures here. I didn't feel comfortable about getting them right here, but if I go to the hourly, one of the reasons why I think we're in for a bounce is if we take a look at the indicator, you've got the 1 hour, the 3 hour, the 12 hour, because the bond futures are not quite 24/7, but they're close. They do trade pretty frequently, so I'm going to feel confident in calling the red wave the 12 hour here. 1 hour, 3 hour, and 12 hour all in oversold all at the same time. The weekly, however, is still just kind of creeping down, but we have a low here. We have a lower low here, and the weekly had already started to curl up. Now we're creating another lower low here, and if we do start to curl, well, then we're going to get some bullish divergence here on the weekly, which is going to take time to work out. It's going to take a while, but this could show some bullish divergence on bonds, which would be basically bearish on the actual yields themselves. So just kind of taking a look at that. And with that, if this does start to recover, then we're going to be seeing equities start to make some more volatile moves. So let's go ahead and move on into Nasdaq. So I've been talking about this channel for a while. And you can see that we've been kind of eyeing this channel. Let me go to a 4-hour here. We've been eyeing this channel here for quite some time, right? Lots of confluence on the uppers and lowers back here in April and May of 2021. And then here we have a high in August and October of 2021. Then we had another high here back the week of Thanksgiving, November 22nd. And now we basically hit that lower again, and we're starting to see some movement to the upside. Now, one of the reasons why I just put a trade alert out on the Discord is because, well, first off, if you take a look at this, you've got the 1 hour, the 3 hour, and the 12 hour is getting close. The 12 hour is getting close to being oversold. But the fact of the matter is we hit this lower rail perfectly. So unless we push down below this rail, I would say that we are in safe territory to be looking at some long positions. And again, I'm going to take a look at the S&P 500, and when I do that, I'm going to be taking a look at options open interest. So let's take a look at open interest on the Qs. So this is not something that I do look at very often, but let's just go ahead and do this. Now I'm looking at the NQ futures, but let's just take a look at options open interest on the Qs, which is based on the Nasdaq index itself. Yes, Bay, I can take a look at Amrs again. I'll do that at the end of the video here. We've got 64% of options which are bearish, and that's basically 2.6 million contracts are bearish for January 21st, which is 1 week and 2 weeks away. 2 weeks away. So although it's very likely that we just consolidate down here for another week, I don't think that it's going to be much more downside. I don't think there's going to be much more downside unless we break this lower rail that we have on this channel. This channel is key. But again, 64% bearish, 70% yesterday of this 183,000 contracts were bearish. Okay, so reasonably you can assume that there are let's see, just doing some quick math on here, not accurate, but quick math, maybe 140,000 contracts of this 2.6 million, roughly, because we don't know how many open and how many closed and all of that. I'm just giving a rough estimate. Basically, potentially 120, 130,000 contracts of this 2.6 million were opened all the way up here when we were in this range. So, more than likely, those people are holding on to those positions. Maybe they got them far out of the money. We'll just have to wait and see. I'm not going to do any analysis on that, but as long as we can maintain above this lower rail, I would say that this is a good opportunity for buying. The last several times where we had several hours of buying opportunity was, back here. We had the 1 hour, the 3 hour, and the 12 hour was actually higher than it is right now. This was a great time to be buying. Back here, we had the 1 hour and 3 hour, and the 12 hour was very, very high, but this was a great time to be buying. We caught a scalp here, we caught a scalp here, I closed it out down here, but it kept running, but then down here, we caught it again, and I'm looking to do it again right here in this area. And I'm a little late to the party, be very honest, a little late to the party. If I would have been staring at the chart right here at the open, I would have been, very, very keen on what happened here at 15,600, which is now going to be pretty strong support. And again, looking left, let me just go ahead and get rid of this open interest chart. Looking left, we've got lots of support that is going to be down here in this area. And, if we do come down here and we take out 15,500, that is a very, very bearish sign. I wouldn't expect that to happen. But what I could expect to happen is something like this, where we break down below, but we go right back inside the channel. If we break down below and we start to consolidate below the channel, that is very bad. That would mean to me that we're going to go down, we're going to retest the median of a channel expansion. Channel expansion is not something that I've had the opportunity to discuss in quite some time. So let me just go ahead and do that right here, right now. What I'm going to do is I'm going to clean this up just a little bit, and hopefully you guys can learn something here. I'm going to remove this fib level, because again, we already had the pullback to the 50, which is why I've got my target up here at 17,378.50. I'm going to put this level, I'm going to mark it out here just so that we've got it handy right there. I'm going to mark it out because that is a target. That's an important target. I'm also going to remove some of these support levels down here. Not as important for the time being, but again, what I'm going to do, and it's inside of TradingView, it's very easy. I've got this channel here, right? Let me go to a 4-hour. I've got this channel, and all I'm going to do, I'm going to hold my control key, and I'm just going to pull that channel down. It duplicates it, and it's not going to be perfect because we've got, I'm on the log scale. So let me just move this down now that I've done this. So our range expansion is going to be down here to the downside, which is depending on how far along we go. And it also makes the assumption that we do break down below this, this rail that we've got down here below us. If we break down below that rail, we're likely going to come down here to the median of the expanded channel, which is going to be at about 14,850 or so, depending on where it's at. It could take more time, right? It could take days, in which case it'd be 15,000. That is a very likely place where we would find a bounce. Right there is a bounce zone. The next bounce zone that I can see is going to be right here. And then ultimately this low right here is going to be one. But this right here is the next area where it would be very important. That's going to be basically at 14,000, which, of course, nice psychological number, or is a round number. It makes a whole lot of sense. 14,375, 14,575. Those are levels that are very, very important. But that's all your bearish scenario if we do break down below this. For the short term, I do think that we are creating a bit of a bottom right now. I actually think we're probably going to see some movements to the upside here in the coming days. But ultimately, I'm still looking for the 21st. The 21st, I'm looking for a more significant move to the upside, but potentially by next Friday, I think we will have recovered a bit of what we lost yesterday. Knee-jerk reaction to what happened with FOMC, and so now we are just basically trying to recoup some of those losses that we had yesterday, assuming that you were long. So let's go ahead and take a look at the S&P. So S&P, I haven't looked at this chart. I was expecting a move down here to 4,700. We talked about this scenario, so this should not really have been a surprise. So ultimately, what it does look like is we've got a completion up here, and then we've got our pullback. And this pullback, again, is what I've been expecting, what we've been waiting for. We've got the 1 hour and the 3 hour, all in oversold, all at the same time. Again, good opportunity for buying. So this looks pretty decent. Probably by next Friday, I would expect that we are probably going to be right back up at about 4,800. Now, I'm not talking about tomorrow. I'm talking about a week from now. It is very, very possible that this does a recovery, again, of what was lost yesterday. So again, let's just talk about FOMC for a moment. Here's another educational opportunity. I hope you guys are paying attention and listening here. I talked about this. I'm going to look at the Qs. I talked about this yesterday, early in the day, and I said, when we get FOMC minutes, whatever the first move is, it's likely going to be the fake out and it's going to revert to the downside. And right here, you can see it happened exactly the way that I predicted. I will be the first to admit that I was long here. I took a little profit up here, but what I didn't do is I didn't do what I said that you should do, which is to sell and buy the opposite direction, because that is the right direction, right? So 9 times out of 10, roughly, the first move after FOMC is the wrong move, and you should be counter trading that move. And that is evidenced by what happened for the rest of the day, right? So for the rest of the day, this moved down, right? And then, of course, you can see here, we opened, we had a nice move up, big push down, but a V-shaped recovery, and now we're just consolidating. So as long as we can consolidate here and not take out this important level at 384.46, then I think we're going to see a continued move to the upside. Shorter term, looking at this, I'm on a 1 minute chart, guys, so just take this for, a grain of salt here, but we do have a little bit of compression on the shorter time frames that we should be paying attention to. We're getting close to a breakout, up or down from those. So it looks like on the minute, looking at the indicator, probably are going to have just a little bit more sideways here, but ultimately, we just have to wait and see. But over time, right, given a week, I think we are going to likely see a little bit of a recovery. For the Qs, that may mean a move back to 390 to 393. So that's my thought on the S&P 500. That's my thought on Nasdaq. That's my thought on bonds. So let's talk about, we're going to talk about Bitcoin, and then I'm going to take a look at AMRS. So Bitcoin versus Tether. All right, so it's hard to be bullish on an asset that looks like this. It looks like absolute garbage. Yes, I do think we're going to get a little bit of a bounce down here, just like I think we're going to get a little bit of a bounce on equities. Now, the weekly on Bitcoin is getting close to being in severe oversold. It's not there yet, though. It's not there yet. So I have made a slight adjustment to my counts here. So again, from here, 1, 2, 3, 4, 5. I'm going to put my 1 down here, and then I've got my 2, and then I've got my 3 all the way down here, and then a 3, 3. So A, B, 1, 2, 3, 4, 5. And if you recall, when we had this 5-wave structure going up, this is when a lot of people were talking about pulling back and then going up even higher. But really, ultimately, I was just eyeing a move to 52 to 54. Now, obviously, that's not going to happen. So I'm going to remove this because I think that those cards are off the table now. So now that we've had this significant move to the downside, right? So now we're sitting down here at 43,000 after seeing a push down to about 42,450. So now we're to the point on Bitcoin where, yeah, we have a buy signal here. Excuse me, you've got the 1 hour, the 3 hour, the 12 hour, all in oversold, but the weekly is getting so close. What I am waiting for on Bitcoin is either a move back up here to 46. Actually, I'd really want to move back to almost 47. I'd really want to see a move that would look a little bit like, oops, hold on. Here we go. I want to see a move come back up here and then consolidate up here again, and then ultimately a push back up above 47 to see that move up there. That would be my bullish scenario, right? That's what I would like to see, but what I think we're actually going to end up seeing. And again, so if this is a 4, then basically we've got a 1, 2. This is what I think that this is the bearish scenario, guys. So just keep that in mind. So we've got a 1, 2, working on the 3, 4, 5. So the 5 would be down here. The 4 would be over here, and we've got the 3 still yet to be had. And then, of course, on a lesser degree, we've got a nice little 1, 2, 3, working on the 4. Then we're going to go down here for the 5, of course, on a lesser degree. And again, these are my bearish counts. So let me just mark these in red. And I know red's not going to be really, really super easy to see, so apologize for that. But this is going to be my bearish count. And I think it is very, very valid that this could be potentially what happens. A move down here to 37,350 is likely going to be what happens. And it looks like this is the path that we are taking to get there. Now, this 5 may only come down to here, which means the 3 is going to be right there. But ultimately, I think this is what we're going to see. I think this wave 4 could take some time, right, before we see a further breakdown. And I think we're going to get a further breakdown. Now, alts, a lot of people are asking me about alts, and I don't have any really fantastic advice on alts other than to say to wait on Bitcoin to come down below 40,000. Wait on Bitcoin to come down to 37 or 38,000. That is when we are potentially going to see a better buying opportunity on alts. Several were really performing well yesterday. And then Bitcoin decided to take over. And I don't care what side of the fence you are on, Bitcoin controls the whole crypto atmosphere, almost in its entirety, almost. So when Bitcoin drops, well, then your crypto is probably going to drop as well. Take a look at FTM, which has actually fared pretty well. We've been talking about this for a while. Let me see if I can get this clear on here. Pull this out and let me go to a lower time frame. So when Bitcoin decided that it was going to fall, this fell pretty significantly. We had a pretty clean sell target up here at the top. Let me see if I can get my other chart up here. FTM USDT. I had a good count that I liked on this. Let me go to a 1 hour because we basically hit the top of this almost perfectly. So just to kind of be open and clear on this, I think we are in the middle of a correction into a wave 4. I don't think that we have created a bottom on FTM. But basically, we hit the 3618 almost to the penny. And then we saw a pretty significant pullback and did a good retest of this level. So we're going to have to wait and see what happens. But that level there at 260, I kind of expected that we would probably see a price back down here closer to 240. That's where I would really be interested in buying FTM again. It looks like what we're probably in the middle of doing is creating a bearish retest, which is probably going to come up here to about 293 to 294. And then we see that further pull back down here to about $2.40 before we see it go higher. So let me remove that and remove this. But ultimately, doesn't look fantastic for the short term. I think that it will see a pullback, but I'd be looking for a move up to about $4 on FTM, given some time. That's kind of what I'm looking at there. All right, so let's move into AMRS. AMRS, this is something that I'm currently out of. This is now currently trading at $4.61. I hate to be the bearer of bad news here. I really do. I hate to be the bearer of bad news because I know a lot of you like this. But this is the reason why I said, if it breaks down below $5, get out. And I was just talking to a member on the Discord earlier today, and he said, well, yesterday was kind of brutal. I got stopped out on this. I got stopped out on that. And, well, you know what? Maybe you got stopped out, but how much capital did you save by not holding? Okay. So right now, I mean, the heat map at AMRS looks pretty bad. I mean, things are looking very bad on the even on the hourly time frame. If I go to lower time frame, like if I go to a 1 minute, over the last little while, even this doesn't look all that great. Yeah, we had a nice little V-shaped recovery here at 440, and now we're at 461, which actually that could have equated to almost a 5% move. That doesn't look terrible. But again, this doesn't really look fantastic either. Going out to the daily, we've got a big red cloud, on this. We made an attempt at $5. I made an attempt at $5, and it's currently failing beyond that, which leads me to believe that we are probably going to go to our next major fib level, which dominant pivot low, dominant pivot high. I talked about a move back here to about $4. It looks to me like that's probably what's going to happen. So the next area I would be interested in attempting any kind of long position is going to be at about $4.10, maybe $4, because we're going to get a golden zone off of that. But the problem is I don't see a nice clean impulse here. I see a 1, 2, 3, but this isn't a 4. Okay, this could have been the 4 if we got a 1, 2, and then we broke up and out, but that's not what happened. So it leads me to believe we're in a much more corrective cycle here. So it's going to take some time to figure out what it wants to do. Okay, and again, kind of going all the way back out here to where it listed, and it actually looks like we've got a split here, which is what kind of adjusted the stock prices. I'm making the assumption here that this stock never actually traded at $259. Based on the split, it was probably trading at it maybe opened at 17 and a quarter, something like that, about $17. So yeah, likely the split is what is making the stock price look a little inflated back here. But nonetheless, this looks corrective. This doesn't look super great short term. So again, I'm out. And I've given you the reasons why I'm out. Somebody just said, 409 closes a gap on the 4-hour chart. That would be great. I assume you're talking about this right here. This gap right here at 408, 407, somewhere in that range. That's a minor gap. I can see where you're getting that from. And I suppose that would be, another reason for more confluence to take a trade at 409. But I do believe that it's probably going to go down there. And I don't know. If you're going to be talking about gaps, let's talk about this gap back here. What about this gap that's down here at 235? So I guess the way that I look at it is it's more based on the technical targets for a bounce. And then we see what happens from there. AMRS on our indicator are basically saying to buy. The weekly is way, way, way oversold. The 1 hour and the 3 hour are saying to buy. The daily, however, is moving down. So this is why I think that if we can get that move down to approximately $4.10, $4.05, that's where I would say that this guy is probably going to be heading. We don't have to fill all the gaps, but ultimately, you can use them as confluence to take a trade. But again, as you can see here, we were kind of looking at this, trying to find a bottom down here. Didn't work, so now we go to our next level. If that $4 doesn't hold, we're going to come back down here to 3.25. That is what it is. Let's see here. I think that's everything that I wanted to cover. Gold is still consolidating. Gold is going to take some time. Again, I do believe that gold is going to go up significantly over the next couple of years. Again, a very, very, very slow market. So that's going to take some time. You can see the weekly is just kind of hanging out. So we're just consolidating on gold right now. Silver, very, very, very manipulated. We had a trade. You can see here, this already played out back in October through November of last year. And so that trade has come and gone. Everybody was kind of expecting silver to just continue to move up, and this is exactly the reason why you take trade setups. So right here, this is where we got out at 25.13, and now we're all the way back down here, basically lower than where we started. So just be very careful with this. Now, the weekly is getting down there. One of the reasons why we took this trade back here is because the 1 hour, the 3 hour, the 12 hour was almost down there, but the weekly was way down there. And that's the reason why we took this trade after we already started to see a staged recovery. We took that trade, and now, of course, it's already fully retraced, which is why why you have stop losses, and two, why you have trade targets. Those targets were all based off of fib levels as well. But anyway, I don't have anything else really of importance to discuss today. If you have any questions, feel free to ask in the Discord. If you need access to our Discord, you can get all of that information on BitDoctor.org. And if you need access, you can go to BitDoctor.org. And for probably another 2 days, I'm going to leave the coupon code for a discount on your first month's membership. But our Discord has lots of educational content, trade ideas, and really a good group of guys that we've got in there, and we'd love to have you there. All right, well, one last thing. Wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.